We have big tech earnings this week, biggest earnings week of the season, of the quarter. Do you guys think markets are going up or down this week? So we can
Mm.
see your vote, bring it back Friday, let you know how you did. Mike says sideways. That wasn't an option.
A very political answer
Yes.
there, Mike. Brenda, Carl, Sarah, Doug, Sherry, RJ, Brent, Susan. Hello. Wow, we got a lot of
A lot of ups.
nice. Got a couple. Dean says down. Savannah says down. Down early, end up. Kevin's getting nuanced with his prediction. I like it. Choppity chop chop, Mike says. Um, I mean, what we've gotten lately, I don't know if you would, I don't know if it's quite chop, more grind, because it is net bullish.
Hmm.
It's just very slow. I built that market pace indicator. It ranked this as like a 5 out of 30 on the market pace. Let's see what everyone else says. Up, up, up. Wayne says up. Alvin says up. Speaking of going up, did everyone get filled on the IWM on the two-way trade that popped over our level? I think some people got filled really early on that trade, which would have been like the 23rd. But then it popped back up again. What I guess this morning it was all the way up at 225.30. Everyone get filled on that one. That was the two-way trade. We're trying to keep the hot streak going for that bad boy. And we're trying to keep the weekend option hot streak rolling, which, by the way, oh boy, do I have some news for you on the weekend trade. How many?
Sharita got it already, she said.
Oh, nice. Okay. Um, how many folks in here trade the weekend options? Okay, we got a lot. Yeah. Okay, we got a lot. So, if you guys know, I put a post in there on Friday saying I opened this new interactive brokers account because Dave T, who might be in here today,
He is, yes.
told me the other day that or a weekend ago, hey Dave, that he got filled over on Sunday, and I immediately sent to Graham. I'm like, dude, Dave said he got filled on Sunday. Is that real? And then we did a little research, and it looked like interactive brokers, for whatever reason, was trading the spot prices on XSP and SPX like as almost like a futures market. And so I opened up an account. I put that post in there Friday that I was going to set up the trade and put the order in, and we got a perfect weekend for that situation. We got some good news. The market popped up. IWM was up like 0.7% or something on Sunday night. And then I checked and my order wasn't live for some reason. So I goofed something up. I posted a picture of it, so I know I set it up as GTC and everything. But I goofed something up, obviously, because when I went to check, I had no working orders for that limit. So Dave texted me and said, "Hey, I got filled at 8:15 again. I got filled in the evening Sunday night again, 2 weekends in a row. You wouldn't even have to be sweating right now, hoping that XSP holds up, although I think it will. You would have already been out before the market even opened. So I'm going to continue messing around with this. Obviously, I have a little bit of work to do here because I messed up the trade somehow. I'm not sure what I did, but I didn't get that working order setting over the weekend. But it was really cool to see another weekend in a row where you got some of that Sunday night pop that could have got it. So I'm not filled on my trade on weekend options, but Dave, our man Dave, is filled. He is ahead of the curve because of that Sunday night pop. And I got to tell you guys, if that is a consistent theme, something that I see happen a lot, I will almost be forced to move all my money into that brokerage account. It's just too big of an advantage, to get extra opportunities like that if it's consistent. So I'm testing it right now. I've only got $5,000 in that interactive brokers account, so I didn't move a whole bunch of money there yet. The platform is super hard for me to get used to, now that I'm used to another platform. But if it gives you those opportunities, it's going to be well worth it. So I will keep you guys updated on that. That's Interactive Brokers, IBKR, Interactive Brokers. So I opened an account with them. I will keep you guys updated. I should be 1 for 1 on my Interactive Brokers test, but I messed something up that I have not figured out what I did. I also haven't checked out yet, Graham. I don't know if you looked up this when we were checking this out. Um, do you know if it's true for SPY as well, or if it's just the CBOE tickers, the XSP and SPX?
I just saw it on SPX
Okay.
and XSP, but does anyone know of any other brokerages that do that? Just curious, because my Thinkorswim doesn't.
Yeah, for sure. Thinkorswim doesn't. I know Robinhood doesn't. I know Tastyworks doesn't. Tasty Trade now.
The brokerage, Interactive Brokers. TradeStation does, says Wayne. Fidelity does not. Lulu says Active Trader.
I think isn't Active Trader interactive, Lulu? Is that a
The question is, does anyone know of any other brokerages where you can trade SPX options even when the markets are closed? For this example, Sunday night when the futures markets open, which is wild. That's awesome. I'm pretty sure here soon a lot of brokerages will be picking up things like that. There's been a lot of talk and speculation of that, and 24/7 stock market, but we'll see. That is so cool though.
Yeah. Well, I think we talk about data and stuff like that all the time, and the way that I trade, especially with those targets sitting out there, I would love to see what the stats look like if you were able to get closes 24/7, essentially, or 24/5.
Mm-hmm. Yeah, Doug, SPX opens at 9:30 a.m. Eastern on Monday, yes, but in Interactive Brokers, you can trade it Sunday night, the options. Pretty crazy.
Cool. All right. Well, I think we got more ups than downs, Graham. So let's talk about what we think.
Yeah, definitely. Let me go ahead and update this for you guys. We've got kind of mixed markets at the open. We did see a little touch and go right now on the S&P. Actually, I'll just bring it up and show you. I shouldn't say touch and go. It's not like it's up huge, but at the open, I was thinking we were going to get a bearish signal quite quick on my 60-minute income trade. You can see the Volt going lower. Our internals were all pointing lower. Stocks were dropping. I mean, if you look at the S&P, so this screen's kind of tiny here, but if you look at the S&P overnight, let me just flip here. Let me do this. S&P had a great overnight, Sunday night open off the tariff news with Europe, and then faded all of that this morning, and we just touched pretty much where yesterday or Friday closed at, and now you can see the markets touch that, and now they're gaining steam this morning. So we'll see if we just get a little range bound action today or some real direction. The real big news this week, again, obviously, is the fact that we have the large tech, the mega cap earnings. We have Meta on Wednesday after the close, Microsoft on Wednesday as well, Robinhood, Carvana, put those in there as well. And then Thursday, Apple and Amazon, MicroStrategy and Coinbase as well too, but Apple and Amazon are the big ones. Now I've got a long trade Apple right now, and I will be holding it through earnings. I do not have any sort of inside scoop, but the signal just says to hold it through. So anything could happen. Anything could happen there, but I do think that's a situation where they're near max pain. They're not at max pain yet, but they've neared it with how much they've missed out on the rally over the last many months. So we'll see what happens with Apple this week, but I really do love Meta as well. Microsoft's been a great stock. Robinhood's been a great stock. Carvana's been a great stock. This is what's going to either prop or drop the market this week, in my opinion. And that's, I don't really have to be too much of a genius to say that. It's just kind of obvious when you have 37% or whatever it is of the US market cap reporting earnings this week. So very, very big week coming up. Not only do we just have earnings, but we also have the Fed interest rate decision on Wednesday afternoon. So the Fed will be meeting at 2 p.m. Given their announcement, it's like 99% chance that they do nothing. But we'll see what they have to say about the future. Then we'll see if they say, inflation's cooling and we are looking to do one next meeting, or if they're going to just say, no, we're not looking to do one right now. Obviously, Trump and the White House really wants them to cut like crazy. So we'll see if there's been any arm twisting that's happened, or if they're just going to stick to the numbers and the data and give us that raw evidence. And we also have preliminary GDP that morning. So big, big day coming up on Wednesday. Morning reports, midday reports, and then aftermarket earnings.
Huge week just all around. I totally expect earnings to continue to be very positive. I think that we're going to continue to see really strong beats. We're going to continue to see margins going up with with more AI utilization and all that sort of stuff. I think the question is, how much does the market require? We've seen, over the last couple of quarters where the market is content with just solid beats and happy to push it up. And we've also seen where the market kind of turns and requires Nvidia and the other leaders to beat by such huge margins that anything, quote unquote, good is still a disappointment. So I think that's one of the questions. It is inflationary. Yeah, I mean they're inflationary gains when you have trillions in assets. Absolutely. So that's going to be part of the question of not just are earnings good or bad, but kind of how are people reading those? Are they requiring earnings to be incredibly optimistic in order to actually move the needle because everyone's on the edge waiting for a pullback, or are we in full melt up? Good is good and run this thing higher.
Yeah, and interestingly enough, like here's where the market's at now. I had this slide for later. I'm going to show you it later. But this is just matching up the RSI, the 10-day RSI with the S&P. And typically this tells you, in theory, when things are getting a little overcooked, overdone, when they could come back. Right now, look, I mean, you can see back in November, got a little overcooked, small pullback. December, got a little overcooked, small pullback. May, a little overcooked, small pullback. We just had a RSI go over 70 in the end of June, middle of July, end of July, and we haven't seen a pullback yet. However, we're getting like mixed signals right now because we're seeing more money flow into the U.S. stocks than we have all year long. Most money, overseas money coming in since 2022, since the bottom of the bear market. And we're still lagging behind where the European markets are this year. So, yes, it's a weird spot because while things do appear to be overcooked, the U.S. is still in sort of a catch up phase where the earnings could then prop it up even higher. So it'll be very interesting to see. That said, I'm treading lightly. I'm actually going to I don't like to quote unquote hedge so much, but I am going to directionally try and time up, see if we get a pullback over the next month and see what the options market looks like and how it can pay us. For the, warning signs that are in front of us right now, seasonally speaking, presidential cycle says August and September are the worst months in the markets. The first year of a new president or first year of a new term. Uh, Typically very, very rocky time in the markets. And also just on every year averaging, August and September are the two worst months in the stock market. So we've only got a few days left of June. Let's enjoy it. But coming up, we know historically speaking, markets tend to get a little rocky here in the late summer months. That does not mean it's definitely going to happen, but it does, we can take the history and learn from it and see what we can do. So I personally believe that we're overdue for a mild, I should just say 5% pullback with an upside of, or a downside of 10% pullback. But again, if we're looking at the data, while it's hard to buy a stock market that looks like this straight up, when we're looking at the data, there still does appear to be some gas left in the tank. Somehow the put to call ratio is right back in the middle, 0.91, meaning the call buyers and put buyers are pretty much evened out to neutral of where it normally is. That is shocking to me. Again, let's look at this run up. We really haven't seen, I mean, we had this little blip in May, but since then, it's been up and away for 2.5 months, yet the call buyers are not overextended. They're not exhausted yet. I don't know how that's possible, but it is. And that's what the data shows us. Also, while that daily chart of the S&P shows the RSI overcooked and says, "Hey, might be time to sell." There's one thing I know about the RSI, having been doing this for a while and seen how it reacts a lot of the time. Many times it'll pop above 70 a couple weeks before we actually get a pullback. So like this one may not be the perfect example, this chart right here. But you can see like here, May 12th, it popped above. We didn't get a pullback for another week and a half. So I don't just sell blindly when it crosses above 70. But that said, when it gets up to 80, that's a little concerning. However, when we flip to a weekly view, we are above 70. We're at 71. We're just at that overbought territory. And again, look, it went for months back here. This is or 2023, June, July, August. For 2 months there, 2 whole months, it stayed above that 70 threshold. Markets went higher. Let's look at 2024, January, February, March, going into April. It stayed above that overbought, you should sell, quote unquote, line for 4 months. Markets went higher and higher. Summer of 2024, June and July again, same thing. So while we are nearing overextended territories, while I would love to see a pullback, a good buying opportunity, I'm not going to say tomorrow is going to be a crash. It's much harder to time up a crash and guess when a crash may happen than it is just to play stocks to the upside because stocks like to go up. But either way, I'm going to buy some protection by doing an out of the money debit spread with puts. I call it an elite trade, but I'm just going to do it with puts to the downside in case earnings do bomb this week. Um, and Nate, I don't know if you had something you wanted to cover before I go ahead and do this, or if you want
Well,
me to.
I was just gonna cover kind of what we've seen historically on that because I think that is the question. Everyone, everyone's talking about are we due for a cool off? Same question we have here. And so I was just gonna walk through kind of the cadence we've seen over the last 8 to 10 years on breaking those highs. So you can do that. You can do your trade first, or I can take it either way. It's up to you.
All right, cool. I'll go ahead and rock it. Let me go ahead and oops. There we go. I'm going to, since the QQQ's been leading, propped up, I'm just going to place a trade with a 5% drop on the QQQ. It'll probably be pretty cheap. We'll see. So let's see, $25, $30 from here, we'll call it. So 539, right about the 50-day moving average, which is pretty perfect. And then I'm going to give it the whole month of August to see if we get a drop in August. And again, I don't like to think of this as protection. It is protection, but I also like to think of it as a directional play. Like, hey, this is very realistic that this could and maybe would happen, and let's try and make some money off of it. So let's see. So this is a pretty crazy trade. What we're looking at here is the end of August. So we've got a full month. If the markets pull back 5%, this trade right here, and I'll walk you through it, would pay 733%. So if you're buying, if you're buying basic puts, let's say you're buying an at the money put and we get a $30 drop, 5% drop, your puts would go up about 200%. By using a spread, we can get 733%. Now there's a little bit more to it than just blind, they're going to move differently a little bit, but the overall profit potential on this specific move is much higher. So what I'm going to do here, again, I'm just playing for a 5% drop at some point over the next month, and I know that this could burn up and be worthless. But what I'm going to do is I'm going to put $1,000 in. Wow, I got to do a whole bunch of these. I might not do. I might find something. All right, there we go. My commission. I want to see what the commission is. Yeah, it's $100 because I have to do so many. So it's 11 cents right now. So I'm gonna buy 90 of these, 90 contracts of these, and I'm just making a bet that hey, I don't know what's gonna happen this earnings season. I don't. We actually had a question here. Jason asked, when we do think we may see a pullback, should I sell stock or just trade more actively? For me personally, I don't like selling the stock that I own because then I have to pay capital gains taxes on it, and a lot of them I'm up really nicely on. I don't really want to sell it and pay a huge tax, cut, and then have to go find another stock that can out earn those taxes that I just will have to pay. So what I like to do here is just protect myself with options. So again, all this is, I'm buying protection that if you can see my line, the crosshairs here, if the markets do get a corrective move before this time or go below this time by that expiration, it'll be 700, probably 750% trade now because I just saw the price drop. However, I'm not going to trade it for that full move. I'm going to go for about 400, 500% here with an auto target set in place. So I've got 90 of these at 11 cents, 12 cents now. So I'm risking $1,000 with a max profit of $8,000. I'm just rounding up. Firm and send it. I'll wait for it to get filled. And once it gets filled, you can either hang on to it, or what I'm going to do is set a profit target at 72 cents, which would pay me 500% return on investment, so $5,000 profit. So that way, if the markets do get a quick drop, like here in the next 2 weeks or so, we'll see the price really shoot up. I'm trying to find one to. It would have to make a real big drop here in the next short term. But the way the options work, as the time decays, you basically need a big drop at first, and then as time decays, a less and less drop. But I'm just throwing out there knowing that, hey, this might be $1,000 lost. But if the markets do crash, take a corrective move here, if my stock portfolio drops, I'll at least offset it here with some gains in my trading account. Oh, let me give you guys the strikes. I did not
Did
give
you
you.
post that one?
Nope. Let me. 29 August 25 expiration. I'm buying 640. Excuse me, 540 put, selling 539 put. And it was at 12 cents. 12 cents right now. Again, if earnings season bombs, this trade will probably look really good. If earnings season goes great, this trade's going to go to zero. So just know that, keep that in mind before placing this one. All right, Nate, I'll flip it over to you to give us the other side of the story.
Well, it's just a quick walkthrough. I think that people have gotten into the mode of, hey, the market, it's overextended. We have to go down. Look at the weekly chart, all that sort of stuff. So I just wanted to walk you through the realistic, um, you know, practical what we have done before when we've hit all-time highs and give you a little extra perspective. Tom said the market only goes up. That's right. No, the market doesn't only go up, but it does go up a lot. And right now we're about 4.8% from the 609 high break. So we're actually pretty much in a middle of the ground. This is not a screeching beat of all-time high. So let's just go back and actually look so you guys have an idea. So this is the previous break to all-time highs. You see here, broke this high, moved up about 6.5% from that high. Once it broke it, that was in October of 2024. The one before here that broke the March highs went up about 6.7% from here to here. Then we got that deep correction, as you can see, before it went back up. The one before that was breaking this all-time high from July. Remember, we saw the flush in July. Then we got the rebound. Went up about 13% before we had any kind of decent correction there. And then we go back a little bit further, and now we're in. Why is there no all-time high breaks here? Because we're now in 2022 range, where it wasn't until here that we even got to all-time high. So you can see the reason there's no breaks is because it's all the way back here on the previous high. Okay, so this was 2022. Okay, then we get to this break. Now there's a break to all-time highs. This was the post-COVID. We kind of had this little baby break here that went up 6% on just one shoot up. Little channel pullback, and then it broke the COVID highs and went up 30% without really any correction at all there. Then we go back. This is 2019. You can see some smaller breaks here. Little 1.7 of the previous high. Then we got to pull back. Went up about 2.9. Little pullback. Broke through this highs. Got about 13.3% on that next rally before the COVID crash. Here we got about 3.5%. This was after the February 18 highs. And remember, we got that flush at the end of 2018, about 3.6 before that. This was a crazy one. This was the high from March 17 that we broke here in May, went up 21% without really any pullback at all. Here was about 9% in 2016. Here we got about a 4.5% just in about 3-4 weeks there. And I think that's the last one I charted. But the idea is we are pretty much in the middle ground here. There's some threes. There's a couple smaller ones. But there's also some 13s, some 20s, and a 30 in there. And so the idea here that the market is up 5%, really hasn't slowed down since breaking, doesn't put us in this super overbought, crazy territory. We could easily see the market do that kind of melt up as we've seen before. Now, the interesting thing I think that is worth noting, and Graham and I actually talked about this going way back in April, normally the deeper flushes actually have even more extreme recoveries. COVID's maybe an outlier, but that's the one that shot up 30% after a couple breaks. And I think it's interesting that we did kind of get this, touch that didn't quite get a weekly close up well above the highs here. And then we got a full break with some follow through. That's actually similar to what we saw with those COVID highs as well, when we got that all-time high move that was up about 30%. So I think we could easily see this market churn higher, but we've also seen a lot in that 4 to 5 to 6% that got a couple, percent of pullback. Now, again, I think it's interesting that in most cases, the breakouts that went up 4 or 5 or 6% and then pulled back were not the ones that had huge flushes. They were the ones that just had very reasonable pullbacks and then healthily continued. It's the ones that went up 13%, 20% that then got, corrected at a more extreme level. So I would actually expect if we do get a pullback this week or next week, that we'll probably get something kind of in the midpoint here of this move. I don't really expect us to get a 10% correction until 2026, to be honest, unless, like Graham said, because we are still in a news-driven market, or there's a crazy rotation in earnings or something like that. I think this grinding pace actually sets us up for a smaller pullback, and then potentially, kind of a seasonal slowdown in August, September, where maybe we lose 2, 3, 4, 5%, but not 10, 12, 15%. And one of the reasons for that is that if you just actually look at our sectors over, say, the last month or so, even if you go back a little bit further back to June, we're not seeing crazy overheated sectors move this market up. If you look, what you see is our weakest sector is about flat, a whole bunch of sectors in here up 2, 3, 4%. And then you've got industrials like technology up 6.5%, 7%. So we're not seeing, the move since the all-time highs where we've got technology up 20% again. Now, technology is up a lot. I mean, it's up like 40% since April when you include the actual drawdown recovery. But since the break of all-time highs, we're not seeing some crazy overheated market action in particular areas. What we're really seeing is consistent growth across almost all the sectors, with the defensive sectors being a little more flat and the healthy sectors being up 3, 4%. So I think this sets us up for, again, maybe a couple percent pullback, but not a crazy overstacked market that we should see a flush. And one of the things I mentioned last night, if you guys jumped on, is that I think one of the things that you can watch for that let you know, are we getting a healthy pullback or are we getting a more concerning rotation, is these actual sectors. So let's say that this week does slow down. If all of the sectors kind of slow down together, technology drops a couple percent, consumer discretionary, basic materials, financial, if they all kind of drop together a little bit, then I think you're just in healthy pullback territory. You're just basically getting some liquidity pulling back out of the market 2, 3%. If you actually see a real rotation where technology drops 4, 5, 6%, communications and financials drop 3, 4, 5%, and staples and energy continue and gain strength, then I think you're seeing more of a rotation, which is actually, to me, more concerning. I would rather just see everything kind of drop 2, 3%, get a liquidity flush, maybe it lasts a couple of weeks, and then the market continues on. So that's kind of what I'm watching. I think we're in that middle territory right now, and I'm not especially concerned about that big flush. But the cool thing with the way we trade is what Graham just showed you. You can buy insurance on that for incredibly cheap versus, moving your entire portfolio around just to adjust, for a just in case couple percent pullback, which I think would be a little bit of an overestimation of where we're at in the market.
Yeah. No, that's cool. The cool thing about this trade, guys, and I wanted to walk you through it. With the spreads that we're using, the timing is everything. So technically, to reach a full profit potential, we would need it below my line by that expiration August 29th. However, depending on how this week's go with the biggest earnings names out there, if we do get, I just posted in the chat, I just pulled the options prices to tell you what happens this time next week. If the markets are only down 2% this time next week, so barely even down, we would call that flat over a week. You're up 25%. If we get a 4% drop, which is going to be, that's a pretty reasonable week, a week that cools off, a 4% drop, you're up 100%. If earnings go really bad, let's say a 6% drop, you're up 250%. So it's really just short-term protection because there's so many variables right now and uncertainties far outside of just technical patterns that tend to line up over time. John's asking why I use QQQ instead of XSP or SPY, just because it's the big tech earnings week. It's propped up a little bit more and it would have more downside room. Just like we saw in the most recent drop in March and April. SPY fell about 20%. QQQ, I think 24%. Maybe it was a little bit more. The tech names just move faster.
Yeah, Q's hit over 25% correction on from the high high to low. So significant. And you guys could probably get zeroed in even a little bit more with something like XLK if you wanted, but QQ is probably going to give you a better risk to reward and a lot more volume to set up the trade.
Yeah, if you guys wanted to go really crazy, you pick this Friday's expiration and don't go that far out of the money. But if you're worried about earnings this week, go to the August 1st expiration on the QQQs and just pick about 2% out of the money. Let's see what it looks like. 2% out of the money is 17 cents. If you're doing the five, if you're buying the 560, selling the 559 for this Friday's expiration. So it's 19 cents now. So it's about 400% return if the markets pull back 2% this week. So pretty crazy stuff.
Yeah.
So again, let me just pull this up. What's going to make or break this week? I don't think it's technicals. I don't even think it's really, well, the tariff news and stuff obviously does get people excited. Deals are really what people are looking for right now. I don't think the Fed's going to move the markets this week. I think it's going to be all in the earnings names, which happened Wednesday, Thursday. Here I've highlighted them on the chart. And actually, tomorrow morning we have Boeing, which Nate, I think you talked about Boeing
Yeah, Boeing should
the other
be
day.
interesting one. It's been on a heater lately, but still so far off the all-time highs that I think it's still in that kind of catch-up trade territory that we talked about.
Yep.
I actually also talked about Merck. Merck is one. The whole healthcare sector has been brutal, and really slowed down. And Merck's gotten absolutely wrecked over a long time, but actually had kind of a little breakout, like a little sneaky breakout week last week. And if you're looking for like an undervalued kind of, I guess we would call those lottery plays, that's definitely an interesting one.
Yeah, it's gonna be fun. We should steal Lance's scanner again and take some trades on some things for fun. I'm waiting for when is Square's earnings? Does anyone know? SQ? Did they already report? Please tell me no.
I don't think so.
I've traded that one. Oh wait, they have a new ticker, don't they? Block.
Yeah.
What is their ticker?
Is it BL? Oh, it's not BLK because that's BlackRock.
What's the Square? XYZ?
Wait, is it really XYZ?
That's
Oh, it
hilarious.
is. Wow. That's not what I would have.
All right, they got earnings coming up. I've used Lance's scanner on it was Square back then, but it makes really big moves on earnings. Let me show you. Like bam and bam. I had one to the upside. Oh, they must have, because the ticker moved. They don't show it, but it was probably like this one. So let's see. Mark your calendars, guys, for 8/7 after the close. We should look at Lance's scanner for that because I don't think I've lost on it yet. Kind of like Fortinet, a little earnings sweet spot. So XYZ, what a ticker name. Way to be original.
Yeah, I did not realize that's what it was.
Yeah. Now, one thing is for certain, in my opinion, is that volatility should pick back up. Of course, guys, tomorrow, every single Tuesday, I do a very, very deep dive into the markets, all of the different internals, what you should be looking for, sectors you should be looking for, sectors you should be avoiding. We'll do some live trades together. So make sure you're here tomorrow. But volatility should be picking back up going into tomorrow. Today's actually a pretty low volatility day in the stock market. We're back at where the market's opened pretty much with this chop so far. Very
Hmm.
small opening range, 0.12%. I think starting tomorrow, we're going to see that pick up to probably 0.2%. And the next, it'll be higher. And my morning trade, if you guys have been paying attention, the 60-minute income trade, it loves volatility. It loves when the markets are moving. And that's because when we have more VIX or more volatility, that means the markets move in their directions faster, which helps us hit our targets faster, which is better for us. As a matter of fact, and I'm not going to give you guys all the rules here, the members know the rules, but if you were to only trade the 60-minute income trade when the VIX spikes 10% overnight, which only happened 9 times, but if you were to do that since the inception of zero DTEs, we've won 100% of the time. So that's how powerful this volatility can be. If we look at a minimum VIX filter, basically, when is VIX above 15, or only trade when VIX is above 15, which is, probably 70% of the time. But basically, if volatility really slows down, don't trade it. What happens? The profitability doubled for the strategy. So there was less trades that happened, obviously, but the overall profitability doubled because this trade, this 60-minute income trade, thrives on volatility. That's because we don't need the markets to go up. We just need it to move a few ticks in either direction. And when we have more VIX, more volatility, like I expect this week, between the tariff news, the big earnings releases, the Fed speaking, GDP, things should pick back up, and that's better for us. And so far, I'm loving it. I'm loving taking these trades, and I hope you guys are already in on it, already taking action, and having fun as well. I know we've had a lot of people write in. A lot of people Friday wrote in. Actually, it was an overwhelming amount of response. I'm very thankful for that. Scott made $440 in his first trade. Mac, 1,500 before breakfast. Brandon did VIP last Sunday, and he ended up turning $900 into 1,440 in less than an hour. And I believe Brandon Nate has been following us for a couple of weeks now and is doing pretty nicely.
Yeah, Brandon's in here today. I got a nice email from him again. Thanks, Brandon. It was really cool to see the actual account history. He shared, kind of what his trajectory has been. So awesome to see that. And I got a whole bunch of people who have emailed me, specifically about the 60-minute thing. And I think kind of like the common theme is it's a quicker way to build. So like, you know what I mean? Like if you really want to try to compound your account as quickly as possible. The combination of getting a trade opportunity every day and getting a juicy winner, not like a 2-3% income trade, is pretty cool. So, people with all different size accounts and stuff. So it's been cool to see a lot of people with those smaller accounts hit some meaningful winners and back-to-back days and stuff like that.
Yeah. Yeah, definitely. Kathy's another great story. Made close to $15,000 in the last 3 weeks. Awesome stuff there, Kathy. $3,000 in a day. Celeste, $500 in 41 minutes. That's awesome. That's right in line with the target that I originally set out with. Now I'm up to shooting for about $1,500 a day, but Oscar did better. Oscar made $3,255 in less than an hour. He says, awesome. We've got many, many more stories like it. So as we conclude today's session, I do want to give you guys another chance to take part in this week's trades. Now, funny enough, we had a pretty low volatility open. We didn't get a new signal today. There was just not enough movement. There was no direction. However, we average about 4 to 5 entries per week. That's one each morning on average. When the markets are moving, when they pick a direction and go, we just ride along. So starting tomorrow, I think we're going to start seeing some real action in the markets. And I want to give you guys another opportunity to jump in on that before the next trade goes out. So Deanna, if you don't mind, let's go ahead and pull up that class. Pay close attention. It's a lot of fun. It's the most fun I've been having in my 15 years of trading. And it's easy to have fun when we're winning a lot. Now, not every trade is going to win. You guys know that. There's winners and losers, but we're winning over 80% of the time right now. And the profits for me personally have been stacking up nicely. My hope is